SK Hynix plans $38 billion chip fab expansion. Post-earnings selling ignored the long-term contracts signed for AI memory. This expansion adds capacity that will pressure margins at Micron once the new lines ramp in late 2025. Enterprise buyers gain leverage because oversupply risks drop sharply for the first time since the last cycle. That forces Micron to accelerate its own Korean fabs or accept thinner margins on AI deals through 2026. The move also tightens supply for consumer DRAM, raising prices for PC makers by mid-2026. Stripe in talks to buy OpenRouter for $10 billion. Every AI developer already uses multiple models in production. Stripe's move gives it the routing data that determines which labs win inference volume next year. OpenAI must either match the routing capability or risk losing direct relationships with the largest customers. Smaller labs face a new gatekeeper for discoverability. The real value sits in the transaction data that Stripe can now cross-sell into its existing merchant base. Payment competitors now must embed similar AI tooling before their developer platforms look outdated. Atlassian shares surge 38% after strong earnings. Teams that standardized on Jira and Confluence now see the first real pricing power in years. That gives Atlassian room to raise seat prices without the churn that plagued the sector last year. Salesforce watches its mid-market accounts reconsider renewals when the total cost of ownership comparison flips. The profit inflection signals that other collaboration platforms must accelerate their own efficiency drives or risk similar multiple compression on the next miss. Investors price in sustained margins instead of perpetual growth excuses. Datadog shares drop 19% on customer spending cut. Large customers tightening budgets now expose how concentrated Datadog's revenue really is across its top 10 accounts alone. Smaller monitoring vendors gain a window to poach accounts that no longer justify the premium. Growth re-ratings can reverse on a single client note regardless of broad demand. New Relic and Elastic must decide whether to hold pricing or chase share while the leader absorbs the valuation hit. Expect even more volatility until top account spending patterns stabilize across the industry. Lyft reports $5.5 billion bookings, up 23%. The Q3 guidance reveals growth halving sequentially to just 1.5% from recent quarters. The 68% jump in sales and marketing spend is the price of holding the line. Uber gains flexibility to boost driver pay in cities where both apps compete directly. Lyft faces pressure to test variable pricing on more trips before year-end. Riders who book infrequently will notice those changes first and may switch when the cost spikes without warning. Airbnb revenue rises 17% to $3.6 billion. Travel demand resilience is baked into the raised forecast despite softening signals elsewhere. Hosts in major cities will face tighter rules once local governments see sustained revenue growth. Hotel groups like Marriott must speed up their own extended stay product launches to defend market share from further erosion. Expect more cities to impose caps on entire home listings by the middle of next year. That shift could cap inventory growth in the highest margin markets over the next 2 years. Alphabet raises $25 billion in debt sale. The real shift is Alphabet moving its AI build-out from cash-funded to credit-funded despite the massive reserves on hand. Rivals will now face pressure to justify their own balance sheet usage in investor calls. Microsoft could announce a similar-sized issuance before the end of the fiscal year. The added interest expense will start to show up in operating margins once the first tranches mature in 2026. Analysts tracking CapEx efficiency will have a new variable to model. OpenAI smart speaker to cost $300 to $400. Every wake word will trigger a full round trip to remote GPUs with no local fallback possible at this price. Amazon must either subsidize Echo hardware more aggressively or accept rising complaints about response delays. The bursty nature of voice traffic will pressure OpenAI's API margins once the device ships at scale in 2027. Enterprise voice features will require dedicated capacity reservations that current plans do not include. Latency guarantees will become the new battleground for model providers. SoftBank borrows $10 billion against OpenAI stake. SoftBank is using debt to double its OpenAI exposure without fresh equity. The borrowed $10 billion sits against shares whose value depends on private market sentiment. This setup creates a hard deadline. SoftBank will likely push OpenAI toward a public listing or tender offer inside 18 months. Any delay risks margin calls that flood secondary markets and weaken OpenAI's negotiating position with enterprise customers. The pressure surfaces first in API contract terms. Hadrian raises $1.37 billion at $8 billion valuation. Automated factories at this valuation mean precision machining capacity doubles inside 2 years. Hadrian's capital targets facilities that produce missile components at scale. The move compresses timelines that traditional contractors have stretched for decades. Lockheed Martin and RTX will have to either acquire similar automation or lose bids on programs requiring rapid production surges. Suppliers without matching tech face margin pressure as primes demand faster delivery. The effect appears in Pentagon contract awards by next year. Unitree seeks $904 million in robotic IPO. A sub-billion IPO for humanoid robotics underprices the hardware race by a wide margin. Unitree's listing sets a floor that ignores potential U.S. export curbs on advanced actuators. If those restrictions tighten within 18 months, Chinese robot makers lose access to key components and the valuation gap with U.S. peers narrows fast. Boston Dynamics backers gain breathing room to lock in enterprise deals before competition arrives. The real test comes when suppliers start choosing sides on export licenses. Jane Street backs $2 billion Australia AI data center. Trading desks are locking in power capacity ahead of the next training cluster build-out. Jane Street's commitment signals that non-tech firms now compete directly for Australian grid access. Microsoft and Google must accelerate their own regional expansions or accept higher costs routing APAC traffic through Singapore. The second-order effect hits inference pricing as latency-sensitive workloads demand local capacity that just got more expensive to secure. Expect power purchase agreements to dominate CapEx guidance this year. Cloudflare lifts annual profit outlook on AI demand. Model training clusters now drive more query volume than all consumer apps combined on Cloudflare's network. That concentration gives the company leverage to raise security bundle prices without losing volume, something Akamai cannot match without eroding its own margins. Smaller CDNs must either specialize in non-AI traffic or exit within 12 months. The updated profit target assumes this mix holds, yet any slowdown in model releases would expose the dependency fast. Legacy providers like Fastly will feel the margin pressure next. Salesforce plans 133 layoffs in California and Washington. These cuts hit the teams that onboard mid-market customers, not the core Salesforce automation group. That suggests the real issue is slowing adoption in smaller accounts rather than broad AI replacement. Competitors like HubSpot gain a window to poach implementation partners before year-end. The pattern points to at least 2 more rounds focused on events and training staff through mid-2026. Certified consultants will likely migrate to rival platforms like HubSpot once those support contracts lapse next quarter. TikTok to lay off 250 employees in Nashville. Automated moderation tools now handle the bulk of U.S. content flags, yet regional slang and context still trip them up at scale. The Nashville closure accelerates that shift and leaves TikTok exposed on accuracy metrics that regulators track closely. Meta's own moderation teams gain breathing room to argue their hybrid approach works better. State legislatures will push human oversight mandates by early next year. New entrants now face a much higher bar when trying to moderate at this volume. NVIDIA weighs reducing memory in Rubin Ultra GPU. Reducing memory per chip eases the shortage but caps the performance gains AI clusters expected for 2025. Hyperscalers must either accept lower throughput or accelerate custom ASIC projects already in the works. Memory makers like Samsung see their pricing power erode faster than expected once NVIDIA validates the cut. The move signals that Rubin Ultra volume will stay constrained well into 2026. AMD gains a narrow window to pitch its MI300X alternatives to those same customers before the next cycle.